Hello again, everyone. Welcome to the Options Mentor. Well, how do you feel after that ruckus on Friday, brought about by President Trump saying that he didn't like some things China was doing on trade, so imposing a 100% tariff in addition to the tariff they already have. The market did not react well to that at all. Started out down about 50 and then just kept getting worse all day long. So it leaves us. We were right there at a very weak close, a little selling after the close. And now, from what I've been reading, there's really a tug of war between those who, what we've been doing, ever since he did the tariff announcement the first time, the market usually feels like, hey, he's going to back down on that. So we'll go ahead and rally back. They've done it, I don't know how many times. But now there's a tug of war between those who think that's going to happen, that will rally back when the futures reopen tonight and tomorrow and early in the week. And there are those that think selling will continue. And I think it's real hard to really say either one. Could be right or wrong. We'll have to find out overnight and into tomorrow. If we look at the chart here, I'm going to share my screen. We'll look at the SPX chart. You see that giant red candle. It looks like there is a smattering of support around 6,500. Could help us a little, and then a little more 6,450 area. So somewhere in there probably would be support. Ultimately, 64, some more support. But I think you could get a little bit of help at 6,500. It may pierce right through it. Who knows? Or we could rally right back up. So that leaves me with feeling here on Sunday before all these events transpire that it's probably best if you don't trade tomorrow, to be honest. I mean, maybe if we had a massive rally, maybe we came back and went back up to 6,600 or more, that would be one thing. But I think it's probably best if you don't trade at all tomorrow. Just stand aside and see what happens and don't start any new trades. Then, whenever Tuesday comes around, we can look at the landscape, see if it's settled down. And we want to see it, we want to see the market stabilize, right? So let's suppose if we had a bad day tomorrow and end up on a weak close on Monday on into Tuesday, well, you probably wouldn't want to trade Tuesday either. But once we get a little stability to this downside, then I think you could look at a couple different trades depending on where the volatility is in there. So let's look at a couple different things. As I said, I definitely think tomorrow's probably going to be a no new trades day. Just stand aside. And then on Tuesday, let's say we have rebounded. We've stabilized. Maybe the VIX is back down 16, 17 area. Well, then you would still want to be cautious and maybe do something like a fly diagonal. Let's take a look at that, where you have very low exposure to volatility. I'm going to use Friday's close. Unlikely we'll be using that in reality, but you can judge it from there. So if we were at 65.52, like we were on Friday, and you wanted to do a fly diagonal, I usually go up around 60 points or so, sell the short of a call diagonal. And then in this environment, if we were, back down around 17, 16 area, what you could probably do is go up 70 from where your center is and then down 80 from where your center is. So that would be, looks like 20, right? No, 30. 65, 30. So you went up about 60, sold a short, you're long, or sold shorts, you're long up 70, and you're on top and then down 80 on the bottom. Looks like this. Now, this is if the VIX is maybe mid-teens. And of course, that's only part of the trade. Now, we'd also want to put on a put diagonal. Probably want to go down here, maybe 50 points or more and buy that. You could probably go 60. Let's look at that. So if we go down here, let's just go ahead and do 60 down. So around 64.90, you'd sell the 64.80. Remember, we're buying our long before the short. That will help us. If it goes down, you don't want your short going in the money before your long. And generally, we need two of these for every one butterfly. And look at that. Now, that looks magnificent because the volatility is so high. And if you saw a graph like this, you know you could get a lot wider. So I would probably go up even further with the fly and then down even more with the put diagonal. Now, we're going to use this trade even if the VIX is high. What if the VIX by Tuesday, we've settled down some, but we're well into the 20s? You know, there seems to be stability, but it's rocky. Maybe we're at 22, 23 on the VIX. Well, then I would probably go up even further for that fly. You can see here I'm going up 70. And now I'm also going to make the fly wider. I'm going to go up 80 for the top and down 90 for the bottom. Now, if we ended up with the VIX a little higher than that, I might even do up 90, down 100. So just keep that in your back pocket. So up 80, down 90 with the fly. And maybe we'd go down even further. Maybe we'd even go down, close to around 80. If we went down to 64, oh, say 70, and we might even go lower than that and buy our long put and then sell 64.60. Let's see what that looks like. Now, once again, if you saw a graph that looked like this, I'd probably go even wider. But you can see the beauty of this trade. You can get really wide, and look at our Vega exposure. It's really next to nothing. You're slightly long. Volatility is going to have a very small part in this trade because your theta greatly overwhelms. So look at the theta here. The theta would be 211 and 36 here on the Vega. Now you'll notice this trade I had set up for the 24th. Now that's a little closer than I normally would do a fly diagonal. I think you could do it if you want that faster time decay in a very uncertain market. If you want more safety, well, then we'll change this one more week. So if you're a guy who wants safety, let's go out one more week to the 31st for our fly and where we sell our diagonal short, and then 3 days wide for the diagonal. Let's take a look. That would probably be the safest way to trade it. I would, once again, get a little wider. You can see with this graph that you would have all kinds of room. Now, this is with the market closed. I think the graph would probably look a lot like this, but if the market was open, it probably wouldn't be quite so wide. But you have to be very careful. Anything, whenever you do, you know what you could put on if you wouldn't want to put it on, but if you looked at it, if you looked at a calendar tomorrow, if the VIX was real high, 20 higher, it would look magnificent. It would look like you could never lose because it's so wide. But the problem is it's very volatility sensitive. And if volatility came down, you would get baked pretty bad. That's why I think we're a little better off to not play with volatility here. If you want to do a new trade, like I said, maybe on Tuesday, if we can get some stability, then I would do a fly and a put diagonal where you have very little Vega exposure. Look at this. I went out that, 2 weeks from this Friday, and you got a nice, very low Vega exposure. You can make this trade, I'm sure, even wider. We could go up higher for the short and each of the longs, of course, and then we could go down lower for our put diagonal, and that's fine too. As long, what I want to see you do is if you do this, of course, you should never do this if you've never done it with real money. You should be doing it on paper. But if this center of it here, where they come together, is below zero, let's make it so that it's above zero. Now, the way to do that is to bring one or both of your spreads in closer. So the closer either of the center of your spreads are to where we're trading, then the higher up this will be lifted. You can see I got wider and it dropped. If I got wider, it dropped even more. So whenever you do this, make sure this is above zero where they connect. And I think you'll find this trade can really help you in this environment where we're very uncertain about what's going on. You want that downside room. And if it does go down hard, not only do you have a put diagonal, it would lift a little bit down here because of the vol of the put diagonal. But overall, your volatility exposure is very low. And if it wants to run back up, you aren't going to get burned that much by volatility. It's only 28 versus in this instance, if you went out another week, 116 theta. So that's what I would be looking at this week. Most likely take the day off from new trades tomorrow, maybe Tuesday, maybe even have to be Wednesday. We'll see when the market can stabilize. Now, we could, as I said, rally tomorrow. It could easily happen. You know, it's happened a lot whenever we've had these big down moves on tariff threats. But we might not. We might follow through and hit some support, drive that volatility higher. You know, the markets ran up a long way. It wouldn't be surprising for it to continue a down move. So we'll have to see how that works out. But that's a couple of ideas for this week. Over in the links in the description of this video, you'll see I put the link up for my new course. I finally got that all scheduled and ready to go. You can follow that link to pay for the course. I will put it on live on the 21st at 1 p.m. Central Time. However, it's being recorded. I'm only doing it live so a few people can be there. Whoever wants to buy it, there could be a lot of people. So they can ask questions at the end of the course that may answer a lot of questions for those who watch it. But it will be recorded. Even if you can't make it live, it's all going to be there. You buy the course, you get the full recording of the questions. If you have any more questions, ones you didn't get answered by whatever people asked or what I taught in the lecture portion, you can always contact me, email me, or maybe even over on my Slack with the course. You could, message me there. So that's coming up. I'll have a little preview of it at 1 o'clock Central on this Tuesday. We'll have a little roundtable, just a little preview of that course on the arimer.com site. You can find that site and how to get there in the description also. So make sure you look at that. Look at all those links in the description. Make sure you hit the like, subscribe, and notify button here on YouTube. And keep those comments coming. The comments have been getting a little more growth to them. I like that. So keep your comments and questions coming. Check out all the links in my description so you can join me every day over at arimer.com. And I'll be back with you next week for another edition of the Options Mentor. Have a great trading week and be careful out there. Bye-bye.